With 2025 almost wrapped up, it's time to start thinking ahead. Because come January, your new TFSA contribution room resets, and that means fresh opportunities for tax free income. Hold on to your seatbelts, folks. Oh boy, this is going to be a good one. The start of January always feels like a fresh chapter for investors. And one of the best gifts we get is brand new TFSA contribution room. This year brings another $7,000 of fresh space to grow tax free. Plus, the bonus of any contribution room you regained from withdrawals that you did back in 2025. Before we jump into the ETFs themselves, let's talk a bit about account priority, where certain types of ETFs make the most sense to hold. For most investors, the TFSA should be the first stop. Nothing truly beats tax-free growth, no matter how efficient other options might be. Next, of course, comes that RRSP, which still offers strong tax advantages, especially if you're in a higher income bracket. And finally, for your non-registered account, that's where tax-efficient ETFs can really shine. They're designed to minimize the tax hit from dividends or capital gains. But remember, even the most efficient ETF can't outdo the power of no tax at all inside of that TFSA. With that in mind, a few of the ETFs we'll look at today might actually make more sense in a non-registered account if, and this is a big if, your TFSA is already maxed out and you're trying to balance tax efficiency across your portfolio. A sub to the channel is the best way to max out your future content. For today's list, I wanted to shake things up a bit, stepping away from the usual suspects to spotlight a few other high performers. So no HYLD this time around, but I think you'll find these picks more than worthy of your TFSA shortlist. So, without any further ado, let's do this. Kicking off this list, we have the Global X Enhanced NASDAQ 100 Covered Call ETF with a ticker of QQCL. This ETF is a great technology play as it holds via, of course, the underlying QQCC. That's the non-leveraged version. A basket of the best stocks the NASDAQ has to offer. They do use covered calls on up to 50% of this fund, as well as 25% leverage to help produce quite a bit of income. At the time of recording, their price was coming in at $26.36, and they have an NAV of $26.32. Those assets under management, $280.57 million. Looking at fees, they have a management fee of 0.85%, and they also have a management expense ratio of 1.86%, and they have an additional trading expense ratio of 0.06%. Okay, let's take a look at that dividend. Their yield coming in at 13.45%. So once again, and these are all going to be monthly today, but it is a monthly dividend of 31.5 cents per share. Looking at their returns, their 1-year return on investment, that's coming in at 13.43%. And of course, you're here for the dividends. So once we factor those dividends in, we get a total return of 26.12%. I like this quite a bit. And as you guys know, if a covered call is not growing in a bull market, it's not going to make one of my lists. And all of these are doing fantastic as we just saw. Coming in at number 4, we will stay with Global X as we have the Global X Enhanced Equal Weight Canadian Banks Covered Call ETF with a ticker of BKCL. This ETF does provide you with exposure to an equal weighting of the Canadian Big Six banks. They also write covered calls on up to 50% of the fund and bring in that 25% leverage as well to boost that income. At the time of recording, their price coming in at $21.67, and they have an NAV of $21.79. Those assets under management, $142.43 million. Looking at their fees, they have a management fee of 0.65%, management expense ratio coming in at 1.68%, and they also have a trading expense ratio of 0.27%. On to their dividend, their yield is sitting at 13.22%. Once again, monthly dividend 24.5 cents per share. On their returns, that 1-year return on investment, 11.87%. Adding in the dividends, we get a total return, 26.74%. That's That's not too shabby. That's not too shabby at all. I will point out a lot of times when I have Evolve's Bank in one of my lists, I get quite a few comments saying, what about BKCL? So this is their time to shine. Taking our number 3 spot, we have the Hamilton Technology Yield Maximizer ETF with a ticker of QMAX, QMAX. Like QQCL, this one also provides exposure to the U.S. technology sector, and they do also employ covered calls, typically up to about 33% coverage. However, where they differ is that this one does not use leverage at all. At the time of recording, their price was coming in at $24.62. They have an NAV of $24.52. And their assets under management, $729.04 million. Looking at their fees, we do have a management fee of 0.65%. And this is the one downside to Hamilton. They're not always up front with what's going on when it comes to a management expense ratio. So we got nothing. We got nothing on that one. And we're going to find a few of these ETFs today are going to be in that exact same boat. Looking at their dividends, the yield on this one, 10.79%. Once again, another monthly dividend of 21 cents per share. Switching to returns, their one-year return on investment, 21.46%. Factor in the dividends, total return, 33.55%. These are, oh boy, these are starting to look pretty darn good. I'm a huge fan of technology, as you guys know. And between QQCL and QMAX, oh boy, you definitely got that sector covered for sure. In our almost top spot at number 2, we have the Evolve European Banks Enhanced Yield ETF with a ticker of EBNK. This ETF, it will provide you with exposure to an equal weighting of the largest banks in Europe. They also write covered calls on up to 33% of their holdings, and this one also does not use leverage. At the time of recording, their price was coming in at $14.58, and they got an NAV of $14.42. Those assets under management, $99.19 million. Yes, they are a little bit lower, but once again, European banks is more of a niche market, although it's a good market. Their management fee coming in at 0.60%, and we do not have a management expense ratio. That is a statistic that Evolve does not provide. All right, taking a look at their dividend, they have a yield of 12%, and that's a monthly dividend of 14.5 cents per share. On to those returns, and these are looking pretty impressive. That one-year return on investment, 28.12%. Factor in the dividends, total return 43.41%. Oh boy, I do like this. And like I said before, this is more of a niche investment. A lot of people don't think outside of the Canadian banks, or sometimes they might think of the US banks, but the European banking sector is pretty resilient. So I think they're worth taking a look at for sure. All right. In our top spot at number 1, we haven't seen these guys in a while. The Purpose Bitcoin Yield ETF with a ticker of BTCY. This fund, well, they're holding Bitcoin, and they write covered calls on up to 50% of that Bitcoin portfolio. They currently do not use leverage, but breaking news, that's likely to change as they have submitted a request to incorporate 33% leverage into the fund. So this fund could get even more interesting in the near future. At the time of recording, their price coming in at $8.97, and they have an NAV of $9.11. Assets under management, $167.9 million. Looking at their fees, they have a management fee of 1.10%. Once again, we got another one that doesn't give us a management expense ratio. What can I say? What can I say? On to their dividend. They currently have a yield of 11.18%, monthly dividend of 8.5 cents per share. On to the returns. That one-year return on investment, 32.89%. Add in those dividends, holy banana bread, we get a pretty good looking 48% on that total return. I am overall bullish in Bitcoin, and this is a fantastic way to have exposure to crypto while getting some income at the same time. So not too shabby, not too shabby at all. And there you have it. 5 standard ETFs that prove income investing in your TFSA doesn't have to be boring. From Bitcoin exposure to enhanced tech and bank income powerhouses, each one brings something a little different to the table for sure. The key is matching the ETF to your goals, whether that's monthly cash flow, diversification, or a bit of growth potential with your yield. And of course, remember, this is the important part. When it does come to your TFSA, tax-free, well, it's always going to be tax efficient. But once you've maxed that TFSA, the rules do change a wee bit for sure. If you are interested in any of these ETFs we looked at today, don't forget to put in a whole heaping helping of due diligence before you place any of your hard-earned money on the table. Let's continue that learning journey. Check out this video on how covered calls make money. Thank you for watching, and I will see you in the next video.